Buying a home is a huge financial decision. It might be the biggest one you ever make. One of the first big choices you face is the length of your mortgage. Do you go for a 15-year or a 30-year mortgage? It's a question that vexes almost every homebuyer. There's no one right answer, as the best choice for you depends on your individual circumstances. A 15-year mortgage means you pay off your loan faster. This saves you a bundle on interest payments over the life of the loan. It also means you own your home outright sooner. A 30-year mortgage, on the other hand, comes with lower monthly payments. This can free up cash flow for other financial goals. Think of it like this: it's a marathon versus a sprint. The 15-year mortgage is like a sprint. You make higher payments, but you reach the finish line, owning your home free and clear much faster. The 30-year mortgage is more like a marathon. You have smaller payments, but you're paying for a longer time. Knowing which path to choose requires careful consideration of your financial situation. We'll break down the pros and cons of each option. This will help you make the best decision for your future. Let's start with the 15-year mortgage. The biggest advantage is the amount of money you save on interest. Interest is the money the bank makes for lending you money. Over 15 years, you pay a lot less interest compared to a 30-year mortgage. Here's an example. On a $200,000 loan at 4% interest, you'd pay over $140,000 in interest over 30 years. With a 15-year mortgage at the same interest rate, you'd only pay about $64,000 in interest. That's a savings of over $75,000. Another big plus is faster equity buildup. Equity is the portion of your home that you actually own. With a 15-year mortgage, you pay down the principal balance faster. This means you build equity more quickly, which can be a huge advantage if you decide to sell your home later on. Think of it like this: your home is like a piggy bank. Every payment you make on your mortgage is like putting money in the piggy bank. With a 15-year mortgage, you're putting money in the piggy bank faster. This means you'll have a lot more money in your piggy bank when it's time to sell. So if you can swing to higher monthly payments, a 15-year mortgage can save you a lot of money in the long run. You'll be free from mortgage debt sooner. Plus, you'll build equity in your home much faster. Now let's talk about the 30-year mortgage. The main appeal is lower monthly payments. This can be a lifesaver if you're on a tight budget or want more financial flexibility. Think of it this way: let's say you qualify for a $200,000 mortgage. With a 15-year mortgage at 4% interest, your monthly payment would be around $1,479. But with a 30-year mortgage at the same interest rate, your monthly payment would only be around $955. That's a difference of over $500 per month. This extra cash flow can be used for other important financial goals. You could save for retirement, invest in your children's education, or even pay off high-interest debt faster. Another advantage is that a 30-year mortgage allows you to qualify for a larger loan amount. This is because your monthly payments are lower, so you may be able to afford a more expensive home. However, remember that a larger loan means more interest paid over the life of the loan. The 30-year mortgage can be a good option for those who prioritize cash flow and financial flexibility. It gives you breathing room in your budget. Plus, it allows you to potentially buy a bigger home. Section 4. Weighing the options: interest versus cash flow. So, which mortgage is right for you? Well, it all boils down to your individual circumstances. You need to weigh the pros and cons of each option. Think about your financial situation and your long-term goals. If your priority is saving money on interest and building equity quickly, the 15-year mortgage is the way to go. Yes, the monthly payments are higher, but you save a significant amount on interest over the life of the loan. You also own your home outright sooner. On the other hand, if you need lower monthly payments to free up cash flow for other goals, the 30-year mortgage might be a better fit. The lower payments give you more financial breathing room each month. This can be especially helpful if you're just starting out or have other financial obligations. It's important to consider your risk tolerance as well. A 15-year mortgage is a lower risk option because you pay off your mortgage faster and lock in an interest rate for a shorter period. A 30-year mortgage carries more risk because you have a longer time frame to potentially face financial challenges such as job loss or unexpected expenses. Ultimately, the right choice depends on your individual needs and circumstances. There is no one-size-fits-all answer. Section 5. Matching your mortgage to your financial goals. When deciding between a 15-year and 30-year mortgage, consider your overall financial goals. Are you aiming for faster debt payoff? Is your focus on saving for retirement or your children's education? If your goal is to be debt-free as quickly as possible, the 15-year mortgage aligns perfectly. It allows you to eliminate your mortgage debt much faster. This frees up more cash flow in the future for other goals. However, if you have other pressing financial goals, like saving for retirement or your children's education, the 30-year mortgage might be a better option. The lower monthly payments free up cash flow that you can direct towards these goals. Remember, it's all about finding the right balance for you. You can even consider a hybrid approach. You could opt for a 30-year mortgage, but make extra payments whenever possible to pay it off faster. This way, you get the benefit of lower monthly payments while still chipping away at your principal balance more quickly. Before making a decision, sit down and crunch the numbers. Calculate your debt-to-income ratio, factor in your other financial goals, and don't forget to account for potential life changes like starting a family or changing careers. Section 6. Final thoughts, making the right choice for you. Choosing between a 15-year and a 30-year mortgage is a big decision. It's important to carefully weigh your options and choose the mortgage that best aligns with your financial situation and goals. Remember, there's no right or wrong answer. The best choice for you depends on your individual circumstances. Take the time to educate yourself about the pros and cons of each option. Don't be afraid to seek guidance from a trusted financial advisor. Most importantly, approach this decision with a level head and a clear understanding of your financial priorities. By making informed choices today, you can set yourself up for a more secure and prosperous financial future. Remember, the goal is to own your home, not let your home own you.